Welcome back to Retirement Coffee Talk with Sharice Rivers at Zinnia Wealth. Online, zinniawealth.com, Zinnia wealth.com. Bill Murray's golf event has been going for about 25 years, and it happened last week. And Bill and his brothers have been doing a golf tournament in St. Augustine at the golf village there, where they have the Slammer and the Squire and King of the Bear and all those great golf courses.
And the Caddyshack restaurant.
And the Caddyshack restaurant, that's right. For 24 years. Next year will be the 25th anniversary.
So much fun.
And now you got to golf with Bill on a couple of occasions.
Yeah, Bill and his brothers. But Bill is hilarious. He's actually more down to earth than you would think. A little quirky and pretty good at golf.
Oh,
and
yeah.
he brings his massage therapist with him. That's interesting. But so was able to, ask some questions, talk to them, and just a fun group, just raising money and brothers teaming up. It's, met mom, met the sisters. My room was right next to their room. I'm like, hey guys, awkward.
I love it.
And they're all piling in there. But yeah, so they always have some fun stuff to say.
Well, each year we go, and a part of it is we get to sit down with Bill and the brothers and fire some questions at them and talk about movies and that kind of thing. So I thought, what the heck? Let's ask a financial question. Okay?
We have to every time. They are like boring, but this was a fun one.
But it was fun. And I said, look, guys, I mean, one of the things that Sharice does is help people with fees and cut down on fees in their life. And we've already been experiencing a lot of fees just getting here. Airport fees, baggage fees, hotel fees, all these different. So I asked the brothers, what is the most irritating fee in your life? Here's Bill and his brothers.
Sometimes when you check out of a hotel, you get a parking fee when you don't have a car. That's to me is the most surprising.
Resort fees at my family's houses.
Well, it's got to be overdrafting, right?
Okay.
Yeah. No, I hate to be kicked when I'm down.
They're so funny. That's so...
Resort fees when I stay with my relatives. That's awesome.
That's awesome. Overdraft fees when I'm down. They're just funny.
I'm sitting in front of all these millionaires and he says overdraft fees. Okay.
Yeah.
All right. So this is really something that you talk about and you help people. I mean, baggage fees are something I expect. I know I'm going to be in for that when I walk into the airport. Financial fees are something that I don't expect and I don't see because it's kind of buried someplace in tiny little print in a prospectus someplace.
Yeah.
But Sharice, when you do your portfolio x-ray for people, this is something that comes out of it. Talk a little bit about that.
Yes. So we'll do a portfolio x-ray for every single person who comes in. So we do have to see your statements ahead of time and get them prepped. But we take a scalpel to your portfolio because we truly believe that in retirement, having 2 and 3 and 4% in fees is outrageous. But your advisor might tell you, oh, our fee is only 1%, but that's their fee. So if the advisor gets that fee, what does the custodian and the big group they're with get paid? So when you're working with the big banks and brokerage firms, there's a light bill they got to pay. There's employees they got to pay. There's these white ivory tower, these leases they have to pay. So they got to get paid. So this is why we take the scalpel to the portfolio. And what we find on average is, maybe your advisor's charging you maybe 1.25%. But the internal fees can be 0.75 to 1.25. So if you're being charged 1 and then the internal fee is 1, that's 2%. There's always another fee that's always tacked on to some of those funds on top of it. So you go down to Fidelity office and you get a Fidelity mutual fund and you get a Fidelity advisor, 1% for the advisor, 1% for the mutual funds. I mean, it's astronomically expensive. I don't feel like every dollar in your portfolio should have a fee. Right? And there should be a 0.5% fee on one portfolio, 1% on another portfolio, maybe nothing on the other half of this portfolio. So you want to split it up so you can keep fees down in retirement. Because if you're going to earn a lower return because you're now living on your income, why do these advisors feel like they can up your fee? It blows my mind, Randy. So you just need to know where you're at. Because if you got $1 million portfolio and we save at least 0.5%, maybe 1%, and you live 30 to 40 years in retirement, that's hundreds of thousands of dollars back in your pocket to do whatever you want, to gift it, spend it, reinvest it. There's so many things out there. And then some of these annuities out there. Oh my God, when I do an annuity stress test, I see 3.5 to 4.5% in fees on average. Good God. Get out of those. Yeah. And some of you might be like, I got a penalty. No, I can get you out, and I can get you out without a penalty. Like, the fees are awful out there in the financial services industry, and they don't stop. They're just still there. The Wall Street's there to get you, and it's just kind of how the platform works. So
we just had a conversation about risk level and how a boring 5% can probably be enough to have a successful retirement. But if you're fighting that uphill battle with fees, if you have a 4% fee on a variable annuity, which is not that uncommon, now you have to make 9% to make the 5%.
Exactly.
And now you're throwing yourself higher risk. And I mean, just plain thought there, let's cut down the fees so I can cut down my risk, so I can have my boring 5% and have a successful retirement. But how would you know, Charisse, unless you do the math?
Exactly. Do the math, do the math, do the math. And I know you guys probably don't know how to do the math. So this is why when you come in, and we build out your entire financial retirement plan and the income plan and tax plan, we are doing the math. We're even doing the math on when to take Social Security. We're doing the math on exactly what Medicare plan you should have. And we're doing the math on exactly what kind of trust or long-term care plan you should build in. There are math equations to everything that we do, and you need to be in front of it so that you have minimal hazards as you're embarking through your retirement years for the next 30 to 40 years, especially if you want to save money, enjoy your money, spend more, and then make sure there's an inheritance at the end of the day.
Well, it's time to dig down on this and do some numbers. And as we say every single show, let's do the math on your retirement, and we will do that math for you at no charge. If you look at our website, you're going to see a gold box there. It says Complimentary Retirement Consultation. That's what it is. It's a free look at where you are, what you've saved, how much it's costing you, what's working, what's not working, what's holding you back. Are you headed for a tax problem? Let's get you that information. 833-368-3680. 833-368-3680. Or again, our website, ZinniaWealth.com, ZINNIA Wealth.com. And the gold box there, it says Complimentary Retirement Consultation. Click on that, and you'll be on your way.
Thanks for listening to the Retirement Coffee Talk podcast. If you have questions or would like to begin the process of building a tailored retirement plan, call Zinnia Wealth at 833-368-3680 or find us online at ZinniaWealth.com.
Investment advisory services offered through Zinnia Wealth Advisory, LLC, a registered investment advisor. The firm only conducts business in states where it is properly registered or is excluded from registration requirements. Registration is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. Insurance products are offered through Zinnia Wealth Management, LLC, Florida license L078655, and Charisse Rivers, Florida license P037744. Zinnia Wealth Advisory, LLC, and Zinnia Wealth Management, LLC are affiliated entities. The information presented is believed to be current. It should not be viewed as personalized investment advice. All expressions of opinion reflect the judgment of the presenter on the date of the podcast and are subject to change. The information presented is not an offer to buy or sell or a solicitation of any offer to buy or sell any of the securities discussed. You should consult with a professional advisor before implementing any of the strategies discussed. Any legal or tax information provided in this podcast is general in nature. Always consult an attorney or tax professional regarding your specific legal or tax situation. Any client experience discussed on this show are unique to that client. Annuity and life insurance guarantees are subject to the claims paying ability of the issuing insurance company. If you withdraw money from or surrender your contract within a certain time after investing, the insurance company may assess a surrender charge. Withdrawals may be subject to tax penalties and income taxes. Persons selling annuities or other insurance products receive compensation for these transactions. These commissions are separate and distinct from fees charged for advisory services. Insurance products also contain additional fees and expenses. Social Security rules and regulations are subject to change at any time. Always consult with your local Social Security office before acting upon any information provided herein. References to specific investments should not be construed as being past specific recommendations. The returns for various indices discussed in this podcast do not represent the performance of the firm or any of its advisory clients. Returns do not reflect the impact that advisory fees will have on an investment. Past performance may not be indicative of future results. All investment strategies have potential for profit or loss. Different types of investments involve higher and lower levels of risk. There is no guarantee that a specific investment strategy will be suitable or profitable for an investor's portfolio. Historical performance returns for investment indexes and or categories usually do not deduct transaction and or custodial charges or advisory fees, which would decrease historical performance results. There are no guarantees that a portfolio will match or outperform a specific benchmark. Investments in fixed income products are subject to liquidity risk, market risk, index rate risk, credit risk, inflation risk, purchasing power risk, and taxation risk. Because bond prices fluctuate continually, their yields change constantly.